webinar all about learning to trade the markets. Yeah, and now we have my slides visible as well. Yeah, it's good to have you back here to our webinar, and thanks to ArgoSFX who makes that webinar series possible. Yeah, my name as always, Stefan Friedrichowski, as you know, and whenever you need some assistance, some help, just send me an email to friedrichowski@argosfx.com. And as always, I have already uploaded the slides for today, so you can download the slides via the GoToWebinar control panel. So it's quite easy. And by the way, today is the 17th of January 2017. Yeah. You see already a big yellow notice here that we will make a break within that webinar series. Simple reason, I have my yearly holiday, so I always do my holidays, let's say, once per year. So I have a longer holiday. I will be out to Colombia. Yeah, so that the next webinar will take place in 4 weeks. That would mean that will be the 14th of February 2017 at the usual time at 2 o'clock German time. So that break, I think you can use that break, by the way, to get practice with your own trading experience. And in order to enable that a little bit more, I will do some practice about trading today. So we will briefly recap what we have done last week, and especially we have introduced two trading setups, which finally leads to 4 potential trading setups. And I will recap that as well, because I want to get a common naming for those setups, because I want to have every trade within the MT4 with a comment, and that comment should refer to the used trading setup, but you will see. And then finally, what I will do is I will trade. So I will show you how to derive trades in our 8 favorite underlyings, and we will do it together. So if there are any questions, just let me know. If something might be not straight for you, just let me know, and I hope I can answer those questions during the webinar already, and otherwise I will get in touch with you via email. Good. First, a little bit recap what we did last week. What we have introduced 2 indicators, and those 2 indicators we use for our trading setups are simply one EMA. So we have within every chart, we have an EMA 200, and that indicator or that EMA will help us to identify what trend behavior do we have. In most cases, you see it by your blank eyes already, but in order to have something a little bit more well-defined, we use that indicator EMA 200. The second indicator we use for our trading is the so-called ATR. The ATR stands for Average True Range, and that indicator reflects a little bit the volatility of the overall market of that specific underlying. So if the ATR goes up, that would mean the volatility increases within the market, and that means, oh, we might not use that tight stop losses. So you see already the relationship between ATR and stop loss. So we can use the ATR as some measure for our stop loss for the specific trade. So then finally we use multiples of that ATR value, and we introduced already a set of so-called good numbers, and yeah, that will be used today as well during our trading session. What we did else, we set up 8 underlyings. Those 8 underlyings which we declare our favorite trading symbols. It's always good to focus your trading activities to a restricted set of underlyings. Otherwise, you might get lost in thousands of opportunities or challenges or charts. So it's always better to have a small focus, and our focus lies on 8 underlyings. The 8 underlyings have been derived by looking for spread values, so costs of trading, and to the different asset classes. And those different asset classes you can see here already within my chart. We have 2 indices. One is the S&P 500 and the other one is the DAX. So the index of 30 stock values. So we have 2 indices. Then we have 2 so-called commodities, and the 2 commodities we have look for is one is gold with a symbol XAUUSD. So that is gold, and the other commodity is oil, and we use the type Brent for our trading activities. And finally, we have 4 different forex pairs. Those 4 different forex pairs stand for the real majors. So those currencies which really have a high liquidity, high volume, and high interest for other traders as well. So they are our 4 major currencies pairs, forex pairs here. So euro, US dollar, Japanese yen, euro, Japanese yen, and finally British pound, US dollar. So those are our 8 favorites. And what we have done else was to set up a so-called profile within MT4, our trading platform. And you see here my overview profile, which is named, and you can always see the name of my profile here in the bottom line of MT4. So we have that overview based on D1 values, so daily prices. And that is simply to have an overall picture of the market. So briefly looking to that kind of picture, we can clearly identify we have upwards trends in the indices. We see that the oil price goes up as well. Gold is a little bit different. We have a recovery here during the last couple of days and maybe 2 or 3 weeks. And finally, we have our 4 forex pairs here with different overall pictures, like euro, US dollar already in a down trend, US dollar, Japanese yen in principle in an upwards trend, but in a correction phase right now. And finally, to the 2 other ones, euro, Japanese yen is a little bit similar, but not same like US dollar, Japanese yen. And finally, we have that British pound, US dollar with a clear trend to the south. But today, you see already, we have a huge candle, a long candle, but that is simply related to the speech of Prime Minister Ms. May. And yeah, she is talking, maybe he has stopped talking right now about the Brexit scenarios for England. Yeah, so that is that event, and that is a framework for trading that is simply called an event, such a news or such a news in a row, and they create normally those huge candles like today. So that is our basic setup, and then later we will go into the sub profiles for each underlying, and those sub profiles, they are sorted like I will show one example briefly here. So I go to my different profiles, and if, for example, I go to Euro, US dollar, then I have those three charts, always one weekly, one daily, and finally H4. Within the H4 chart, we will place our trades, but we use the other one, the other two, weekly and daily, in order to identify the overall trade direction, so the flow of the money for that specific underlying. Yeah, so that was last week, and now let's go a little bit further. And I only have, I think, 2 slides. One is to recap once again our 8 underlyings. You see our 3 asset classes: indices, commodities, and forex. There's a 4th asset class which is related to interest rates, like Bund future, for example, or within United States they are called T-bond and T-note. Those we don't have at the start, but we will introduce those later during our webinar series. So here are our 8 favorite underlyings, and the other one, the other slide, and that's already really today the final slide already. And the slide is already identical to the one I mentioned last week, but you see some changes in green, and those changes in green will help us to set comments later in MT4 for individual trades, because I want to label every trade with a specific name, and in order to have always the same kind of naming to later, for example, sort my trades along those different categories. Therefore, it's quite helpful to have a unique naming for every trade we enter in MT4. It's better for the later analysis. So we introduced already 2 base setups, which lead finally to 4 trading ideas, and the 2 base setups are trend trading, and the other one is range trading. And I think the name is already telling the content of, or how those trades will look like. Trend, of course, if we have an underlying with a clear trend, then we can use that trend for 2 sub categories of trading. The first one is simply to follow exactly that trend. So we trade into the direction of that trend behavior. But we can do the opposite as well. And the opposite is simply called counter trend trading. And that means, okay, we see maybe a clear upwards movement, and now we have a correction, or we have the feeling that it's time for a correction of that trend, so an opposite behavior. So that would mean that we enter a trade into the opposite direction, and that is then called counter trend. So if we would follow the trend, then we would label the trade follow trend, and if we do exactly the opposite, then we call that trade counter trend. And then we have a totally different setup that is called range trading. Whenever we realize that an underlying more or less is stick to a specific range, so those sidewards movements, they can sometimes last very long, and then we identify that kind of range. And if so, then we have two possible trading ideas. And one is to stay in the range. So that would mean if we maybe the price goes to the upper side of that range, that would be a chance just to trade into the opposite direction. So that is stay in the range. So when we say we expect the underlying to stay in that range, then we would use the label stay range. And the other one is the one which is called range breakout. And range breakout simply means that we expect if the price once breaks out of that established range, then this will be lasting. So it will be breakout in whatever direction. And then we label that trade a break range. So it's only an abbreviation, more or less, to have those four names: follow trend, counter trend, stay range, and break range. And we will use those labels for comments in MT4 in order to later still know what kind of trade have we done. And then we will use a suffix for how we set the stop loss. And we have two possibilities to set the stop loss. One, of course, is simply the chart. So we see maybe some resistance, some highs, some lows, and we might use those values for stop loss setting. Then we will use the suffix _chart because we take that stop loss value out of the chart itself. And if we use the ATR value, then we use the suffix _ATR in order to label the trend. So finally, a trend might be labeled with breakout break range _ATR. So that would be the label in the comment field of MT4 for that specific trade. So that's already everything, and now it's time simply to practice what we have learned. And in order to have trades, and you know that we most of the time we will not open a trade directly, which would mean we open a trade at market. Most of the times we will use those pending orders, and pending orders are conditional orders like buy stop, buy limit, buy sell, and no, not buy sell, sell limit and sell stop order. And all those kind of trading possibilities, I think we will do during the next couple of minutes for our 8 underlyings, our favorites. So let's really practice, and I will show how I will do it. And you have the chance for the next 4 weeks to do similar things. I hope you will have good results with those kind of setups. But as always, and you know from my starting slide, whenever you do trading, you do it on your own risk. And there's only one person who is responsible for those trades. That's simply you. So that's a risk warning I have to mention always here within that kind of webinar. Good. But now really back to trading. So let's go here. Since already we have one underlying open, that is Euro US dollar. Now let's start really with the overview and then go straight through everything we have. So I go to the profile overview, and so that is my starting point for today. And let me try to go through every of those 8 underlyings during the rest of the webinar. So let's start with S&P 500. And we have a profile for that already. And that profile is named, of course, S&P 500 weekly, daily H4. So we can use that profile, and we have always the same kind of charts, and that's good to have that kind of behavior because it helps us to have always the same view. So unfortunately, because not long ago, Algo-Trading has changed the symbol for S&P 500. Therefore, the history in the weekly chart is not that long, but you know, during the last nearly half year, we have a straight move upwards. So we have a strong trend upwards. So that is what we can see and identify in the weekly chart. It is simply confirmed in the daily chart. So here it comes already a little bit more interesting because you see that there's something like a range already establishing here. So we went upwards, then we have one short correction and went back to the original value, and we are still here within that kind of range. So the overall trend is to the north. So in principle, we should favor a long trade, but finally, let's do that kind of decision here within the H4 chart, and you see that I have zoomed that chart already a little bit up. Still, even in that chart, we have compared to the EMA 200, we have an upward trend, and but on the other hand, we might say, okay, something looks a little bit like a range, and let me try to illustrate that range a little bit. So hopefully everything went well here, and I only use that range, and you see that I don't care about those two candles which have already left that range. So maybe let me see whether I can change the color for that range. I will go to the object list and will edit that one, and I will make that range yellow. So now it looks a little bit more easy to interpret. So we have in the H4, we have a good range. So now we can play around with our setups. And one possibility could be to say, okay, let's wait until we come back to the upper side of that range, and we would expect the S&P 500 to stay in the range, so it should go to the south once again. Another possibility might be on the lower side, the same wording. That means we go down and then we go upwards again. Good. On the other hand, we have an EMA 200, which clearly indicates us the price goes to the north. And now we can combine the two thinkings. And to combine the two thinkings would mean, okay, let's wait for an S&P 500 which first moves to the south, and then we would like to open a long trade into the trend direction. So and finally I want to have on the other side a breakout. So let me mark one line here, because that line, and I make a line already simply still within the range. So, and that line should indicate my potential price level to open a long trade. What does it mean? that means in the language of MT4, we have a buy limit. So only if the price goes down to the red line, then I want to open a trade. And now the next question is, hey, how to set the stop loss? And in this case, maybe one possibility would be the latest low. So that would be somewhere here. But let's compare this result to the ATR consideration. Right now we have an ATR value of, let me look for the value. So it's about 7.5. So that's the ATR value. And something which is always a good idea is to have ATR multipliers of 2 or 3. So let's think about an ATR multiplier of 3 in this case. So that would mean our 7.5 would be multiplied to with 3, and this would result in 22.5. So our stop loss would be 22 points, 22.5 points below our entry level. So entry is here 2248, and that would mean our final stop loss would be at 22.26 and something, so a little bit lower, so somewhere about here. Good. So we use an ATR multiplier of 3 for our stop loss setting, and we want to have a buy limit order exactly at the red line. Good. Now we simply take those numbers. I quickly write them down. 2248.2 is my entry level, and 2225.4 is my stop loss. And now it's time to calculate our lot size for that trade. And then we go back to our Excel sheet for that calculation. And still, I hope you remember the contract size for S&P 500 is simply 1. So I have 1 here. Then we need the exchange rate Euro-US dollar. Okay. So Euro-US dollar is right now at a level of 1.067. 1.067. And our entry for our trade should be 2248.2, and our stop loss at 2225.4. And the risk I have in mind for every trade is 50 euro. So finally, the Excel sheet calculates my lot size, and my lot size is, in this case, 2.3. You will later see that I cannot 2.33. I cannot trade exactly that, but let's come to that as well. When I open or when I place the order, what I have to write down as well is the take profit, and the take profit is 2316.6. Good, and now we have a trade, and we can place that order. So as always, you press F9, or you do it out of the chart with a right click. And what I want to have is a volume of 2, and I will try to 0.33. And you see, oh, that doesn't work, because we can only order integer numbers for that kind of underlying. So my volume is 2. By the way, I don't want to have a market execution, no market order. No, my order should be a pending order, and the type is a buy limit. Only if the price goes down to the red line, then I want to have that kind of trade ongoing. So therefore I choose buy limit, and my price level for the entry is 2248.2, and my stop loss is 2225.4. And let me check my setting. I have a risk reward ratio of 3, so that is a good number here. And now I can enter already the take profit of that order, and that is 2316.6. And now my trade is ready to be placed, and I press that button. Now we have the order within our chart. You see here the entry by limit to lots in this case. We see our stop loss here, and finally we see our take profit, which would be here. And this is a good level. So think about a trade. So the potential trade duration of such a trade would be, of course, several days, maybe 2 weeks. But you know, I'm now looking for trades for the next 4 weeks when I'm on holiday. Everything can be set up here, and I can simply wait for those trades, whether they are executed, so whether they are filled, if we reach that red line. And now the trade is ready. Good. So that's the first trade for S&P 500. So let me go back to my overview, because I want to make some additional comments now for going to the next underlying. So normally my next underlying would be to investigate the DAX value, so the Germany 30. But since I can see already a lot of similarities between the two charts, and I can see already here I might come to the same kind of conclusion for another trade. And therefore, I don't want to open an additional trade here as well. There is one chance, to be honest here, and the other chance here would be to have a buy stop order here already at the upper side, with the thinking to say, if the price goes now only upwards, so we would open a long trade on the DAX as well. But we don't care about what happens before. So this would be not the exact same story. And by the way, now I realize that I forgot to enter the comment for the trade, but anyhow, that's only due to having those trades here online during a webinar. Normally, I would not forget that the task to label my trade. Unfortunately, I cannot do it afterwards, but anyhow, I could delete the trade and reopen the same trade, and then I can set the comment as well. But let's save a little bit time. And back to the story about, do we have a next chance or a second order on Germany 30? Yeah, so I would say yes, there might be, and then I would place a buy stop order here at that level. Let's see whether I have time at the end. Then I would come to that trade as well. But let's first ask ourselves for other opportunities. So then that means that we switch to the commodities. So we have gold and Brent. And since I only want to have, on a first view, one trade within the commodities here, although we can see clearly that those two commodities definitely do not behave similar. So those two charts are by far not similar. So here we could really look for those two commodities independently and come to our conclusions here by just investigating on one of those. So whatever choice we go for, let's start with gold. So I switch here to my profile for gold. And as always, we first look to the weekly chart, and we see there has been very long ago a clear downtrend within gold. And then for nearly 1 year, we have more or less a sidewards movement, so a little bit up, a little bit down, so very tricky phase, very tricky to deal with. So on a weekly basis, finally, we see there's a favorite to the south because still the price is below the EMA 200. And let's directly move to the daily chart. So even here we have a downtrend, so it's going to the south, but there's not it does not need a long move still to the north, then that would change the slope of the EMA 200, and then we would be above that level as well. So it's a little bit unclear what kind of situation do we have. So finally, let's look to H4 for gold, and this one in a bigger chart. And now we can realize, okay, here we have already a trend reversal, so going down, and now it's already going up. And what does it tell me? I will go to the complete overview with all the three once again. For me personally, that means I don't have a real clue. The only chance I would see is to say I would open a trade to the south, so a short trade, because still I have the weekly and the daily chart going south. On H4 it goes already up, and so we on H4 itself we would have a trend reversal, a counter trend, but it's really tricky to have a good trade here within that underlying. What does it mean for me? I skip it. So then let's go directly to the other commodity, and the other commodity has been Brent. And let's look whether we have a better picture here, because I only trade pictures which have a common story. If the overall picture is too unclear, then I simply would not trade. And already on a first view, we can see it's quite tricky here as well. So we have on a long time scale, looking nearly 1 year back, yeah, there's an uptrend during the last couple of weeks. Before that, it was something more or less only like range. Same behavior then in the D1 chart. Okay, this is at least already something like an upwards trend to the north, but it's really tricky. And looking to H4, it becomes tricky as well. But now let's zoom. Now let's zoom and have a view on the complete picture here. And now it's maybe even interesting once again. We can see something like a range here. Yes, we can. And let me let me illustrate that range once again with a rectangular. So we have something like this behavior within the chart. Okay. So the EMA indicates an upwards trend. So the preferred direction is to the north. And now we can use the following. Let's do a real breakout trade here. So whenever we come to that level, then we want to open a long trade on Brent. And I write down already the number 57164. And now, of course, the important question is where to set the stop loss. For breakout trades, we have a good opportunity to say, okay, stop loss, we do not use the ATR value. For breakout trades, we can use the range itself. So we would use the lower end of that range as being the stop loss level. So 53014. So that is a good stop loss for that kind of trade. And let's have a look for setting up the right contract value for our Excel sheet. So, and for Brent, we have a contract size of 100, and then we can go to the Excel sheet. So Brent is 100, contract size 100. Brent is traded in US dollar, so we need the exchange rate Euro US dollar once again. And our entry level was set to 57.164 and the stop loss level 53.014. And we see already the lot size for a risk of 50 euros, and we can write down our take profit value, which would be 69614 at a risk reward ratio of 3. Let me first draw that take profit line in the chart. So we have that value a little bit more to the north, so 69. So we need a 69 here within the chart. And I do the task simply in order to show myself is within a certain time frame, can that level be reached? Yes or no? So it's about here. And you see already, it's a little bit tricky. It's quite far away, that level. So it might be a good idea here to have a lower risk reward ratio in order to have the trade really coming to the take profit. So that is a point in time. I change the risk reward ratio to 2. That gives me a new level for my take profit, 65464. And I can switch to the chart once again and now have that level set to what we have calculated. So that is about here. And now the trade looks better, and therefore it's time to have that trade running. So it would be a buy stop order. We expect the breakout to the north because we have a positive slope within the EMA 200. And that we can set exactly that trade to our order list, new order. So lot size is now 0.12. And what type of trade do we want? It's a pending order, and we trade a buy stop order. So that is a typical breakout to the north. And now first I will write down the comment. So it's a break range trade, and my stop loss comes out of the chart. Therefore I use exactly that label, and the price for that the entry level is 57.164. Stop loss is 53.014, and my take profit for the trade is 65.464. So that's the next trade. I can place the order. I always check once again the lot size, it's correct, and then I can place the trade. So now that trade is within my MT4, and I can simply wait. So those trades will be in the pending list for maybe the next 4 weeks, but if they are executed, good. So then we can see in 4 weeks how those trades have ended. So that is Brent. And now let's go for at least one Forex trade. So we go back to our overview profile, and you see how useful it is to have those profiles, because you get all the charts always identical as you have them every time. So it makes trading much easier. So before I start to trade or to identify one of those Forex pairs, I first will delete my trading idea of last week, Euro Japanese Yen, because we can maybe have new ideas today. So there's it's time to have that trade out of our trading list now. So let's have a view which Forex pair looks quite good for next trade. So in principle, I can tell you I would like to have a view, to have a closer view to Euro US dollar, then of course to the south. And another good candidate would be British pound US dollar to the south as well. The problem with the latest one here, British pound US dollar, is of course we have that ongoing Brexit discussion, but I think the today move is done. So now it's time to let's say recover. So both trades are quite similar. In both cases, I would trade to the south. What type? We have to look further in detail. So, but yeah, now it's time for a decision. So my decision right now is for Euro US dollar. So let's have a closer view on that as well. So that means I switch to the profile Euro US dollar. And we have always the same kind of story. Looking to the weekly chart, the last complete year was only one big range. One cannot name it differently. It's only one big range. And by the way, maybe I should illustrate that simply by one big rectangle. And that might be something like this one here. Now, once again, sorry, no, it's insert, and then I go for shapes, and it's a rectangle, and now I have it, and it would be something like this. I would even not go really down. I would use this one. So that is really a sidewards range within euro US dollar, and you see that is a so-called fake breakout to the south, now going upwards, but we know that the overall direction is clearly to the south, and same we can see in the D1 chart, coming from a more sidewards behavior, going down. Now we have a correction upwards once again, so going down would be my favorite. But how to set finally trade? We will do that in, of course, here in our H4 chart. So let's make this chart big. You see we have a downtrend here. Now, finally, for the last couple of days, we have something like a side move. But it should be time to go down as well. But now we have two opportunities. One is, of course, we can go really to the lower end and say we do a breakout trade on that end. But in my case, I want to start already somewhere here, going to the south. And that is a little bit driven by everything which is going on within the United States. You know, in a few days, we have the introduction of Trump as being the next president. Good, we know that. I have no clear idea what really happens then, but I think south is here a good direction. So in this case, it might be even a chance to say, what if we go for market trade as we speak, going south right now? Let's first, that would mean we have about a level which is here. So now the question is about stop loss level. So once again, the two opportunities, one is out of the chart, maybe a latest high, which would be here, or the absolute latest high, which is even here. Let's ask ATR value as well. And the ATR is right now at 0.0038. And let's have a look of what does it mean if we would have a trade with 3 times ATR. So 0038 times 3, and then adding up that number of 0.11 to the current price level. So that would mean a stop loss which is about here at 1079 and a little bit. So that would be a nice stop loss level, and take profit 3 times our stop loss value. So let me write down those numbers. So I have a stop loss at 107,523. I have an entry at market, that is 106 783 about, and the rest can be calculated via the Excel sheet. So I go to the Excel sheet. Contract size Forex, as we know, is 100,000. Euro US dollar exchange rate we do have already here within the Excel sheet, and entry is 106783, and stop loss is 107523, and that would mean a risk of 0.7 lot, and the take profit would be at 105,303. So that is a trade, and that trade would be entered market. Good. Let's try. We open an order, and next trade is a market order. Lot size first, 0.07. We go market, and we will comment that trade, and what we think is here that we do a trend trade, and let me recap our wording, and that is follow trend, because we have identified a south trend, a trend going to the south. Follow trend would be the name, and we have set the stop loss via ATR. Good. Stop loss level. Stop loss level is at 1.0753. Let me wait until the numbers are there. It's always a little bit slow because of the webinar software and to get all the data to you. And take profit is 1.05303, and then the trade is set. Good. And we want to have a short trade, so we press sell by market because we want to have the trade right now. Good. Let me check because of stop loss setting, whether I have really the right risk. Yeah, I have the right risk. So the line was a little bit wrong named here. So that is the trade we have for Euro US dollar. So now we can go back to our profile, and I hope that you see now how it works. And even doing so, we have now 3 trades after, let's say, 3 quarters. And that's not untypical that we need 15 minutes in order to identify one trade. And why not? It's fair and okay to invest that time for analysis and for setting up the trade and so on and so forth. And now we have 3 trades, and you see hopefully how it works. In principle, I would go further with all the 3 remaining Forex pairs, and finally I would revisit the DAX value, and I would have a view once again on gold as well. But that's for now. We have 3 trades for the next coming weeks, and let's see where they end, and let's see how that goes. Hopefully, after my holiday, you come back to the webinar series. We have a couple of topics, additional trading setups, which I know that they are profitable. I want to introduce those trading setups for you. that you have some more input on that as well. And we will visit a little bit about the trading psychologically, because we have to look for statistics. We have to look for how an account might look like and how often we have winners, losers, and what does it make with our account, and to see how to manage everything with those winner series or loser series. So it's quite good to have that as well. So I hope you are curious to get additional input in the next coming weeks. After the short break of 4 weeks, so next webinar will take place at the 14th of February, and I hope that I have everybody within the webinar once again. Still, you can find the recordings. You know how to reach that recordings. You know there's a YouTube channel, and you can have a second view on those videos as well, even on the one of the last couple of weeks. So that's for now. Have a good day. Have a good time. See you once again in 4 weeks from now. Thanks. Bye-bye.